To the week on Dalal Street, the sensex and the nifty end absolutely flat. Mid-caps relatively underperform. Banking stocks end weak while FMCG has a pack gains.
Titan among the top nifty losers after reporting a below-par performance in Q1 on the back of weak demand, whereas FMCG stocks gain after Marico reports an uptick in volume growth. Dabur sees improved demand in rural India. IMD's forecast of better-than-expected July rainfall aids sentiment.
Banking stocks react to weak first quarter FY25 business updates. Bank of Baroda corrects after registering its weakest deposit and loan growth in 12 quarters. AU Small Finance Bank falls almost 5% after deposits decline in the first quarter. Hello and welcome to a fresh new edition of Markets Forward. It's been a flattish kind of a day, but only if you want to look at the indices, which you should not do. We'll talk more about that. This is your go-to program where we aim to get you everything you need to know as you prepare for the next trading session. I'm Prashant. With me, my colleague Rima Chandulkarima. Hi.
Hi, second day of consolidation for our markets, but we'll talk more about it in the next 20 minutes. We've got all the big news, the key developments in Dalal Street, top corporate voices, the events to track ahead. But first, the day's market action. Very quiet. The Nifty's moved in a 100-point range. That's about it.
Yeah, so indices were flat, Rima. But I think, it was bubbling under the hood, under the surface, because, again, it's all about mid-caps and small caps and micro caps, and the story continues. In the morning, I was highlighting how over the last 1 month, from the close of the election results day, that is the 4th of June, mid and small caps and micro caps have done between 20 and 25%, the indices. And that is where the real action continues today as well. So not very much at all on the Nifty, or the small cap index, or the mid cap index was down slightly, and so was the Nifty Bank. But, more flat than anything else, but lots of action. PSU names, especially in the railway pack, and we'll talk more about that in just a bit, in fertilizers, infrastructure. That was a pack where there was a lot of action and activity. Now, PSU banks were under pressure, and of course, maybe thanks to some of these business updates. Metals as a pack was under pressure. Real estate was under pressure, and pharmaceuticals. But these are, when we talk about these sectoral indices, they're made up of sort of larger names. And what I'm trying to say is that the action really is if you have to go down the market cap curve, and that's where, the real sort of play was going on, and big volume-led gains in a long list of names once again today. Rima.
Well, even in the large cap space, there were quite a few interesting stocks moving up. So ONGC went home as the top Nifty gainer. FMCG, of course, we'll talk more about it. The Nifty FMCG index was the best performing sectoral index. And there you had names like ITC, HUL, Tata Consumer, Nestle. IT2 saw some buying. Remember, earnings kickstarts on Thursday post-market hours with TCS. So in the beginning of the trading session, it was Wipro, and then HCL Tech also joined in towards the end. The PSU banking, though, was under pressure. The Nifty PSU banking index was down close to about 1.5%, with names like Bank of Baroda, Union Bank under pressure. But let's also tell you what we have for you on our show today. We start with the top movers and shakers of the day. Vivek is there. Lots of business updates came in from FMCG stocks like Marico and Dabur. We'll get you the key reasons behind their up move. We also delve into the key market events to watch out for tomorrow. But first, to the big movers. Vivek, it's over to you now.
Well, thank you so much for that. As you mentioned, today was the day where you actually saw quite a lot of the FMCG names do very well in the session. So the entire FMCG pack, most of them that came out with the operational updates as far as Q1 was concerned, and even some of the names, that are yet to disclose their Q1 quarterly performance. So have a look at names like Dabur, Marico amongst the top gainers today. ITC, HUL also did quite well, and Adani Wilmar, very strong update coming in there. Stock cooled off from the highs, but still ended over 2% higher. The second stock on the radar was one from the life insurance pack, HDFC Life. Very strong operational update coming in as far as the month of June was concerned. Stock ended near the high point of the day. The other set of stocks that we were talking about is the entire railway PSU pack. All of the stocks continued their move higher In fact, we also went ahead and did an analysis about how all of these stocks currently are trading at significantly higher PE multiples compared to where they were even just a couple of months ago. The next stock on the radar was Kalpataru Power. A very interesting note coming from Investec today on the entire power as well as the power utility space. Stock cooled off towards the end of the session, but a buy rating coming in over there as well. On the other hand, some of the stocks that saw some weakness in the session today. First on the list was Bank of Baroda, almost 4% lower, ending near the low point of the day. A weak operational update, especially when you're comparing it to the other banking peers. AU Small Finance Bank, while the loan growth over there was not very weak, the street is concerned about the loan to deposit ratio at almost 93%, much higher compared to its peers. The stock lost almost 4.5% in the session. The third stock on the radar, one among the top nifty laggards, was Titan. JP Morgan downgraded after the weak Q1 upgrade. A lot of analysts have gone ahead and given EPS cuts as far as Titan was concerned, especially the underperformance compared to Kalyan Jewellers. And lastly, the entire pharma pack today, all of them saw about a profit booking. Divi's Labs almost 4% lower, Mankind, Natco, Cipla Granules, all of them ended lower in the session today.
Okay, thank you very much for that. Anand Tandon and Shilpa Rout of Prabhudas Lilladher are with us on the show. Anand, Shilpa, thank you very much for joining in. Anand, particularly want to talk about these railway companies. They've been a big beneficiary of the infrastructure spending, the expansion of our railway network. The order books have been swelling, but so are the valuations. Now, it's great if you already own them, but if you don't, is there any railway stock which still is okay, even if you have a long-term horizon, you're willing to hold on for 5 years? Would you bet on any railway stock?
Short answer is I would not. We are in a melt-up market. The market will give you an opportunity to make lots of money. Most of them are already priced to perfection and then some. You cannot expect that anything which is related to the government will continue to grow at 40% year on year for the next till perpetuity, which is what many of these companies are now pricing. So I would be very cautious of them at this level. However, as you mentioned, if you own them, stay on with some kind of trailing stop loss. At least they are not companies which are going to vanish overnight.
Shilpa, same question to you. Technically, any railway stock looks attractive, promising just over the near term?
Yes, Rima, I think IRCTC from the FNO pack is still looking very attractive. It can do 1100 to 1120 zones. As long as it is holding above 1020, I believe the stock is very well placed for that higher targets.
Okay, all right. Coming to you guys with more questions in a bit, but the stock of the day was, one of the stocks of the day was Titan. It ended with cuts of over 3% after reporting a sort of subpar performance for the first quarter. And Mangalam is here to tell us, some of the highlights here. Mangalam, take it away.
Well, if you look at the jewelry companies that have reported their first quarter update so far, Senco showed a growth of around 11% that came in today. Kalyan Jewellers grew about 29% in their India business that came in on Friday. And Titan over the weekend came in and said that their domestic jewelry operations grew at about 8% itself. And as a result of which the street thought that maybe, Titan's valuations, which are higher than the peers, and growth which is lower than the peers, could make it perfect for some profit booking as well. Titan stock is down 20% from the highs already, but still trades at a significant premium to the other listed entities. High gold prices, lower wedding days, as well as weak sentiment is something that Titan attributed the weak performance to, or weaker than expected performance to this time around. And brokerages believe that this will have a bearing on their margins as well. So JP Morgan has actually lowered their target price by about 5 to 6%, or EPS estimates by 5 to 6%. They've downgraded the stock. ICICI Securities too has cut their EPS estimates by 5 to 7%. They've cut the target price from 3,400 to 3,200 as well. And Goldman Sachs says that key competitors have done much better in the first quarter, which is a cause for concern. And Morgan Stanley says their margins are likely to be lower by about 11, by their expectations of around 11% as well. And this, even as the management told us that they don't see the margin growing beyond 12% in the medium term.
Well, 5 straight days of losses now for Titan, and in that period, the stock is down nearly about 8-9%. But Mangalam, talking about the FMCG pack, Marico surged 4.5%, Dabur was up nearly 3%. What were the key highlights from what the companies had to say?
Well, for both Marico and Dabur, two things really stood out. The first one was that demand has improved quarter on quarter, more so from the rural side of things, and as a result of which the consolidated revenue growth for both of these companies has been mid to high single digits as well, closer to mid single digits sort of volume growth coming in for both of them as well. For Dabur, what did well was their home care as well as healthcare verticals, and for Marico as well, we saw Parachute coconut oil as well as Saffola do well. The weakness that we saw for Dabur in some of their portfolios and for Marico in their value-added hair oil portfolio, they believe that will improve going forward, largely because they were seasonal in nature, or maybe the turnaround is around the offing. What also stood out for both of them was that the operating profit, despite increase in ad spends, actually grew marginally higher than the revenue, which implies margin improvement for both of them. So you would then say that why is it that the Dabur stock grew just about 2.8% in today's trading session with nearly 5% up move on Marico? That's largely because over the last 1 month, Marico as a stock had underperformed Dabur. So maybe some of that underperformance was getting undone in today's trading session. Their commentary bodes well for the entire consumer sector, and that's what showed in all the other FMCG stocks that did well today too.
Okay, thank you very much for that. Anand, the improvement in the rainfall in the month of July is also aiding sentiment. I think the IMD has said that finally now we have a surplus. So it's just 1%, but at least the deficit appears to have been covered. Anything in the FMCG pack? Because, folks are betting on consumption as a key theme in the budget.
No, that's right. I mean, obviously, among the various sectors, FMCG is one which will perhaps to some extent directly benefit from uptick in the rural economy. And the one thing that you can be sure of is that there will be a focus on trying to uplift the rural economy given the election results. In that context, therefore, companies like Dabur actually are natural winners because, you are looking at a presence which is a little more dependent on the wider market rather than just urban India. So far, most of the FMCG and consumer goods have been focused only on the upper end of the income segment, and that has done exceedingly well because that was a lot more resilient. I expect to see that getting broad-based. So to that extent, the various FMCG companies will generally benefit. That is not to say that there is too much upside that you should be factoring it in the near term, given their valuation. But relatively, they are now looking somewhat more affordable.
Relatively looking a lot more affordable. Well, let's talk about banking updates, right? And this is again first quarter updates which came through from Bank of Baroda. We also had numbers coming through from AU Small Finance Bank. Both stocks were down sharply, 3-4%. Abhishek is here to tell us some of the finer details. Abhishek, take it away.
Well, to begin with Bank of Baroda, on a sequential basis, if you take a look, deposit and advances growth are the weakest in last 12 quarters. And they have lost market share as well because their YOY numbers are below the industry level growth. So take a look at the deposit momentum. It's up 8.8% YOY and a decline of 1.6% sequentially. Industry-wide, deposit growth in June was around 12% level. Domestic deposit is further weak. It's grown by only 5.3% YOY and down by 2% sequentially. The advances growth are about 8% YOY when compared to industry growth of 15-16% on a YOY basis as of Q1 that the banking sector has seen, and it's declined by 1.7% sequentially. In this, the domestic growth is about 8.5% YOY and down by 1.8% sequentially. In the domestic loan book, the retail portfolio grew really strong at 20.9% YOY and about 3.5% sequentially. So overall, the CD ratio has declined both YOY and quarter-on-quarter, and the domestic CD ratio, however, has improved YOY and quarter-on-quarter due to the decline in deposits. AU Small Finance Bank, now deposit growth is weak over here. Deposits have declined on a sequential basis. However, cost of funds have improved for them for the first time in many quarters. So deposits are down 0.5% quarter-on-quarter. We cannot compare the YOY numbers because there is a merger that's based into effect with respect to AU Small Finance Bank in this quarter. Cost of funds have declined by 7 basis points sequentially to 7.03% when compared to 7.1% in the previous quarter. Overall, AUM growth is at 3.5% while the advances growth is a strong 5% growth. So if you take a look, calculate the CD ratio, that's on the higher side at 93% plus, so which leaves analysts with the worry that there will be further hike or growth for deposits which can put pressure on the net net interest margin. CASA is up 2.7% quarter-on-quarter, and CASA ratio has improved to 33% versus 32% in the previous quarter. Back to you.
All right, got that. Shilpa, any of these stocks with specific trades in the banking space?
Prashant, if you look at AU Bank, I believe, AU Bank here should, hold 620 levels. And if it does, then, you can again look for targets of 680 to 700. So my focus would be on AU Bank.
Okay, all right. We'll, more financials is what we're going to focus on, and this time from the life insurance space, because numbers for the month of June have come through, and it looks like HDFC Life has outperformed in the month of June after some time. Yash is here with details. Yash.
Well, Prashant, the numbers for the industry in the month of June have been very, very consistent to the past performance. The important point here in the month of June has been the performance from HDFC Life. It's a strong premium growth, strong APE growth over a very strong base. So June premium grew at 8% on a base of 33% growth. First quarter premium grew by 9%. Total APE grew at 27% on a base of 28% growth. Retail APE grew at 34% on a base of 28% growth. ICICI Prudential followed HDFC Life on the path to this strong performance. June premium growing at 14% on a base of 23% growth. First quarter premium up 24%. Total APE growing at 13% on a base of 41% growth. Retail APE growing at 28% on a base of 12% growth. Max Life Insurance, it was a moderate growth for the company on a very strong base. So first June premium, that was down 6% on a base of 45% growth. First quarter FY25 premium up 12%. Total APE growing at 18% on a base of 19% growth. Retail APE growing at 22% on a base of 12% growth. SBI Life Insurance, it was a weak growth for the company over a weak base. So of course, both ways it was negative. June premium grew at 22% on a base contraction of 13%. First quarter premium was up 13%. Total APE growing at 17% on a base of just 3% growth. Retail APE growing at 18% on a base growth of just 5%. Finally, LIC, again, weak growth over a weak base. So June premium growing at 14%. Base growth was a contraction of 21%. First quarter premium was up 28%. Total APE growing at 21% on a base growth of just 0.3%. And finally, retail APE, that growing at 13% on a base contraction of about 11%.
Anand, any standout stocks for you in the insurance pack?
Well, you have to actually take a basket of these. I think the sector looks quite interesting even today. Though obviously there has been a certain amount of run-up, and the penetration has now become fairly decent. But that said, I think, there are still some different triggers. LIC is not going to show you higher profits because of the fact that they are selling more insurance. They will get higher contribution because they are allowed to charge another 2.5% extra. So you will get an earnings growth coming through that. State Bank has an infinite pool from which they can continue to sell. HDFC has been doing a spectacular job of being able to grow. So I think a basket of life insurance companies would be a good thing to have in the portfolio.
Okay, all right. Shilpa, any of these stand out to you from the insurance pack? Not really high momentum stocks by any yardstick, but is there a trade around here?
Yes, definitely. It is HDFC Life. HDFC Life, we have been recommending at around 600 zones last week. And the stock has the potential to run more than 100 points from here because it has underperformed quite a bit. And it is just coming out of that consolidation of 610, 612 zones. So I believe a stop loss just below 600 should work fine. And you can easily see the stock moving towards 665 to 680, 700 zones.
Shilpa, also a quick word on any stocks that you would watch interestingly poised for tomorrow?
I would look at Gujarat Gas. Gujarat Gas has given a good breakout today at the closing, and it should see levels of 700 in a few sessions from here. So Gujarat Gas should be the focus.
Anand, RVNL, IRFC, IREDA, IRCON, RCF, MIDA. I mean, I'm just looking at some 10 names, all PSUs, right? And not just railways, but outside. Fertilizer was a big sort of mover, and throw in a defense name like a Mishra Dhatu there as well. So really bubbling under the surface, as I said earlier, with lots of momentum, lots of activity.
Well, that's right. I think farm input is something that I had mentioned a few weeks back as something that I think would be an interesting space to look at. Fertilizers hadn't done that well that much till then. Some of them have done better now. Pesticides, I think, is still a place where there is some upside possible. Generally, uh, uh, among the PSUs, these are probably, and besides the energy players, I think, you would expect, at least I'm kind of bullish that towards the second half of the year, you will find energy costs going up again. And many of the other players like, polymers, etc., already the prices are fairly high. And there is a shortage in the country now. So some of these commodity players can also do reasonably well. The more order-driven companies, I would stay away from.
Okay, all right. We'll leave it there. Anand, good speaking with you. Thanks for staying on. Shilpa, appreciate you joining in on the program today. Well, we'll just play out some sound bites from the IMD. We had Mr. K.S. Hosalikar, the Deputy Director General of at the IMD, who says that July will see above normal rainfall. And he essentially said that monsoon rains now the momentum looks good for further advancement in the north and west. And broadly across the country, he's expecting good rainfall through July and then future months as well. Maybe a region or two in the northeast perhaps will be deficient. Otherwise, it should be a good monsoon season. Listen in, we'll take a break and see you on the other side.
We have said that July would be above normal rainfall. As a country as a whole, we have said that the forecast is the rainfall would be above normal. The distribution is also quite good, but within a couple of days, last 4 or 5 days, the monsoon is covered. And I think now we are in a quite comfortable situation as far as the rainfall is concerned across the country. As July, probably the August, September also could be, a lot of rainfall to be expected.
Welcome back. You're watching Markets Forward. It's time now to get you some of the important corporate voices that we heard earlier today. So first up, Bajaj Auto. Rajiv Bajaj, MD of the company, said the company is looking to break even on their new CNG motorcycle within this fiscal year, and once they hit a capacity of 40,000 bikes per month. He also added the company currently has started with a capacity of 10,000 bikes per month. Rajiv Bajaj also went on to say the company's electric three-wheeler business is already profitable.
Well, we had Man Industries, which was also in focus. Stocks, of course, done very, very well. They had a big order win. The company gave CNBC-TV18 a FY25 revenue guidance growth guidance of between 20 and 30% on a year-on-year basis. Margins, they're guiding for between 11 and 12%. The company said in FY26, that is 1 year ahead, revenues could be around the 6,000 crore rupee mark with margins at about 12%.
Next on our radar is Dhanalakshmi Bank. The management told CNBC-TV18 they expect their NIMs, net interest margins, to grow by 20 basis points to 3.4% this fiscal year. They expect the net NPAs at 1%, gross NPAs above 3% in FY25. The company also has the approval for a capital raise up to 300 crore rupees via a rights issue.
All right, Shilpa Medicare is the next company. We had a conference call and the management sort of talked about their CDMO customer which on Friday had come out and said that they believe they've got a positive result from a very important clinical trial for a molecule. And this molecule is this drug, the tablets which are going to be produced are going to essentially be used to treat kidney disease. This customer has placed a binding purchase order for with Shilpa Medicare. The cumulative milestone fees, according to the company, is $10 million. They say they will start supplies from the first quarter of FY26. The agreement is for 4 years, and the company plans a renewal for another 4 years, but with certain riders.
And as we wrap, we bring you some of the key market events to watch out for. Mangalam is standing by with the key events. Mangalam?
Well, tomorrow, we will have a couple of results that will come by. So we start with Delta Corp as well as GM Breweries. Delta Corp was one of the big movers in today's trading session. The last couple of weeks, we've also seen GM Breweries move high in today that trading period. So as a result of which, those numbers would be crucial to watch. Also, FMCG stocks were in focus today on account of Dabur and Marico's Q1 updates. And the street is awaiting updates coming in from Godrej Consumer as well. So that is a stock that will be on our radar. And plus, financials will be in focus. It's a Tuesday tomorrow. Nifty Financial Services expiry, and that will play out, especially in light of the weakness that we saw in the Nifty Bank in today's trading session. This would be important. Alongside that, we'll also watch out for a lot of these quick service restaurants and restaurant stocks, because NRAI will launch its India Food Services report in tomorrow at around 12. So any insight from that would be important to track from a QSR restaurant stock perspective. And then back in the US, we will keep an eye out on a bunch of events where Powell will present the monetary policy report to the US Senate Banking Committee. They will testify before the Senate Banking Committee as well. And the Treasury Secretary Yellen too will testify before the House of Financial Services Committee. So those are a couple of events that we'll watch out for from India and abroad.
All right, Mangalam, thanks very much for that. It's a wrap on this edition of Markets Forward. With that, we'll be back with more news and updates on the other side. Stay tuned.